After almost a year stuck on dry land, cruise lovers may be itching to hit the high seas again on their favorite cruise lines. Carnival Cruise Line plans to resume its cruises in June, but is still working to finalize its COVID-19 protocol for future voyages. Carnival stock is up more than 30% this year, after the cruise ship conglomerate in early March began to urge customers to resume bookings. In this video, we will check out Carnival Cruise CCL stock analysis. Number 9. Carnival Cruise CCL 2021. Carnival stock has jumped by almost 60% over the last 2 months as investors viewed news surrounding the efficacy of COVID-19 vaccines and commencements of dosing in the U.S. as a sign of the beginning of the end of the COVID-19 pandemic. The jump in the stock price is largely warranted considering that Carnival and other cruise stocks have been bearing the brunt of the pandemic. Last year was tough on both industries for the obvious reasons, but it was downright brutal for cruise lines. Of all the maritime cruise line stocks, though, Carnival has arguably suffered the most. Shares lost 58% of their value between the end of 2019 and the end of 2020, failing to make any sort of meaningful recovery even after the broader market began to recover in April. Should shareholders expect more of the same bad news now that COVID-19 vaccines are finally being distributed and administered? Nope. Even if it's a things can't get any worse dynamic, Carnival shares should start to surface in 2021. Shares have zoomed 21% above their buy point of $24.48. The breakout from a cup with handle base was February 22nd. Now that shares are extended, you'll have to wait for the stock to form a new base to find a new optimal buying point. Still, if this breakout continues a while, but then shares pull back to their 10-week moving average, that could offer a secondary buy point. Number 8. CCL stock starts to shape up. Holland America ships out. There could be a sizable upside to Carnival post the COVID-19 pandemic if the company navigates its current challenges and sees demand pick up by 2021. The stock trades at about $15 currently and has lost about 70% of its value year to date, as the coronavirus pandemic essentially brought the cruise line business to a standstill. Cruise lines from the U.S. have not sailed for the last 7 months or so, although most cruise companies are looking to resume some level of operations. The stock traded at about $44 per share in February as the markets peaked pre-COVID and is about 65% below the level presently. That said, the stock has gained about 28% from lows seen in March 2020, driven by some progress in shoring up its liquidity and the multi-billion-dollar stimulus package announced by the U.S. government, which has helped the stock market in general recover to a large extent. One thing that sparked renewed interest in Carnival was that Carnival-owned Holland America, HAL, said that it is now booking cruises from September 2022 through April 2023 from piers in Asia, Australia, and New Zealand for a variety of exotic ports of call. Destinations include the Great Barrier Reef, Hawaii, French Polynesia, Tonga, Fiji, and American Samoa. Number 7. Carnival Cruise Line stock. Bon voyage to the Love Boat. Meanwhile, Carnival has used the pause in seagoing operations to improve its fundamentals. The cruise line has rid itself of 16 less efficient ships. The most recent one was Pacific Princess, the smallest ship in its Princess Cruises fleet. Carnival plans to dispose of at least 19 ships. The 19 ships represent about 13% of pre-pause capacity, but only 3% of operating income from 2019. After pruning ships, remaining ships in the Carnival fleet will have roughly 14% more passenger berths or beds per ship. Pacific Princess was named in honor of the original ship bearing that name, which was featured in the 1977 to 1986 TV series Love Boat. In addition, Carnival slashed its monthly cash burn to $500 million as of the fourth quarter. That's down from more than $700 million in the third quarter. Number 6. CCL Fourth Quarter Report. CCL reported an adjusted fourth quarter net loss of $2.06 per share versus a 62-cent gain a year earlier. The world's largest cruise company ended the November 30 quarter with $9.5 billion in cash and cash equivalents. Cumulative advanced bookings for the first half of 2022 are ahead of 2019, despite minimal advertising or marketing by the cruise operator. About 60% of Carnival bookings during the quarter were new rather than rebooking of canceled or postponed voyages. CCL held customer deposits as of $2.2 billion as of November 30th. That was down slightly from $2.4 billion as of August 31st. Most are in the form of credits for canceled trips. Entire cruise line fleets sit empty or forlorn. They are docked or moored without a passenger on board. Number 5. CCL stock. What's the Carnival fleet? Carnival owns 9 cruise lines, including its namesake, Carnival Cruise Line, as well as marquee lines Princess Cruises, Holland America Lines, and Cunard. The combined fleets consist of more than 100 ships. However, amid coronavirus pandemic cruise freeze, the company is getting rid of less efficient ships. Carnival is focusing on ships with upgraded features. Carnival is incorporated in Panama. Its operational base is in Miami. CCL stock is dual listed on the New York and London stock exchanges. The London stock trades in the U.S. as an ADR CUK. The company was founded in 1972. It lays claim to the title of world's largest leisure travel company. It is also the world's largest cruise company, carrying nearly 45% of global cruise passengers. Number 4. Fundamentals for CCL stock. Carnival Cruise Line stock ranks a modest 19th out of 37 stocks in IBD's Leisure Services Industry Group, according to IBD's stock checkup tool. The group itself ranks a so-so 50th out of IBD's 197 groups. CCL stock has an IBD composite rating of 37. That means Carnival shares lag 63% of all stocks on a number of technical and fundamental factors, including price performance and earnings. Generally, CAN/CLIM investors consider only stocks with a score of 90 or higher on the 1 to 99 scale. CCL stock sinks to a low 8 for its earnings per share rating. The 8 rating is terrible, but not surprising given the coronavirus pandemic's impact on vacation cruising. It means that Carnival's earnings per share growth have outperformed just 8% of all publicly traded companies in earnings. Stocks with EPS ratings of 80 or better have the best chance of success. Keep in mind, too, the company could rack up huge losses in 2020. The EPS rating could plummet further this year. The stock has an IBD SMR rating, sales plus profit margins plus return on equity, of E. That shows that Carnival is in the bottom 20% of all publicly traded stocks when it comes to the composite profitability measurement. Number 3. The cruise line's technical ratings are weak. When investors are looking for top stocks to buy, they want to see a stock shaping a proper chart pattern. IBD's long-term research shows that certain chart patterns are the launch pads that kick off virtually all major stock moves. CCL stock's previous breakout was in 2017. In March of that year, it broke out from a flat base. But on January 30th, 2018, it began a downtrend. On some downturn days, volume was 4 times above average, a bearish sign. In 2020, once news broke of an epidemic in China, Carnival stock plunged from above 50 to an April 2nd low of 7.80. It has trended higher since. It's trading above its 200th and its 50th day moving averages. Investors should only consider stocks above their 50-day average. Number 2. Additional technical analysis on CCL stock. CCL stock's relative strength, RS rating, is 72, is modest, but up from a moribund 16 late last year. It is short of the 80 minimum investors look for. The best stocks trend to have an RS of 80 or better as they start a new climb. IBD's proprietary RS rating ranges from 1 worst to 99 best. Measures a stock's price performance in the last 12 months against all other stocks. Still, the stock has an IBD accumulation distribution rating, AD, of A- on an A to E scale with A+ top. Its rating is up from B- a month ago and from C in the fall. That B- rating indicates moderate to heavy net buying by institutional investors such as mutual funds. Number 1. Is Carnival Cruise Line stock a buy? Carnival isn't a top pick right now for the faint of heart or investors in or nearing retirement. This crowd needs more certainty and less volatility than this ticker can deliver right now. But for long-term investors who can stomach the risk and volatility, last year's losses are this year's opportunity. Just be realistic about your expectations. The stock looks poised for a bon voyage once the coronavirus pandemic is truly tamed. Maybe shares will retreat into a new base once the current euphoria abates. That could set up a new buy point. Meanwhile, growth stock investors generally should focus on the best stocks in the stock market's leading industry groups. Neither Carnival's Leisure Services Industry Group nor the cruise line company itself meets that standard. The group is a lagger. The company is an also ran in its group. At the moment, CCL stock is not a buy. The 15 analysts offering 12-month price forecasts for Carnival Corp have a median target of $20, with a high estimate of $33 and a low estimate of $10.79. The medium estimate represents a 23.33% decrease from the last price of $20.09. Do let us know in the comment, do you think cruises are safe in present times? What are your thoughts about this cruise stock? Please subscribe to the Stock Advisor. Thanks for watching.